Hey everyone, welcome. I'm Lindy. I'm one of the SEO folks here at Taxwell. That means that I'm not a tax expert, but I am kind of obsessed with what people are searching for as far as taxes go online.
And I'm Morgan. I'm also from the SEO team. Me and Lindy don't write the tax code or build the tax software, but we do track the trends. For example, hundreds of people are asking, what is the salt cap? And what is in this one big beautiful bill that everyone's talking about?
Exactly. So today we're going to dig deeper. We know you've heard of the One Big Beautiful Bill, but we want to unpack what's actually in it and how it affects real people when they go to sit down to file this year.
Yeah, so to help us do that, we've brought in the experts. So we have Jared here. He's VP of Government Relations, who tracks every twist and turn that comes out of Congress.
And we have Tim, the director of our product management. He is who turns all of this complexity into TaxAct's easy to use software that real people can use every day to file their taxes online. Welcome, you guys.
Oh,
Yay.
thank you.
All right. So now that we got introductions out of the way, we can go ahead and get started. So Jared, there's been a lot of chatter online about this bill, the one big beautiful bill, but we want to go behind the headline. So can you talk us through the most impactful parts?
Oh, yeah, absolutely. When we think about the one big beautiful bill, something you guys might hear on social media as you're out there is the new naming or the smaller term called OB3. And, sometimes it's a little easier to say than one big beautiful bill. But yeah, it was passed this past summer, July 4th. And there's a lot of different call outs in it when we think about tax deductions and savings. And some of the things that I want to highlight that I think are most important to taxpayers out there are going to be things like the child tax credit and the refundability of that. And there's some nuances to be able to claim it. We've got something called the salt cap, right? I think we're hearing that a lot. No, the government's not trying to cap how much salt you intake on your favorite French fries out there. It actually stands for the state and local taxes, right? So the taxes that you're paying your states for things like your property. And so those are deductible on your tax return as well. And then there's 1099K thresholds. What is that form, right? And we're going to talk a little bit more about that today and how you may not get as many forms this year when you think about getting like W-2s or 1099s. The threshold to be able to report those or required to report those has changed. So we'll talk a little bit more about that later. Um, and then one that is one of my favorites out there is no tax on tips, no tax on overtime. I think everybody is wondering, what does that mean? How does that impact me? How much can I claim? And we'll talk about that. And then auto loan deductions. So those that have loans on your vehicles, what vehicles qualify, and how much can I deduct? How can I claim that? All those things are going to be discussed, I think, later today in this podcast. Yeah.
Yeah, and then Tim, can you go into a little bit how this new Social Security number requirement and the child tax credit changes and how that's impacted in the software?
Of course. As Jared mentioned, not every household will feel this change the same way. So if you meet the requirement, nothing really changes. You enter your information and we'll automatically apply the child tax credit to your return. But if you don't meet the new requirements for the new SSN rule, we don't want you to be caught off guard. Our goal is to make sure you understand what's changed and how it affects your return. So if you add information about yourself, your spouse, or your children, the software will call out the update right away and explain what it means to your situation.
Wow, this is so like wild to hear how you get all of this into the product. The ITIN and this child tax credit specifically are great examples, but from like a broader perspective, I feel like it's super interesting if you could go into like when legislation like this passes almost every year, probably, like how do you start getting this type of thing into the product?
Right. So once a bill is finalized, our tax experts jump in right away. They break it down line by line and translate it into plain language rules. From there, our product and development teams work hand in hand to design the experience. The goal is really when entering your information, the product guides you step by step. And the calculations update automatically to your tax return so that it reflects the new law. And before anything goes live, we test with real tax situations and real taxpayers to make sure it's not only accurate, but it's also easy to understand.
So for something in the one big beautiful bill, like the new car deduction, how would that show up in TaxAct's filing software?
Well, that's a great example. The deduction requires the car to be assembled in the US. But honestly, how is anyone going to know that for sure? That's where we come in. Your car's VIN, for instance, contains indicators about where it was built. The software will point you exactly where to find that, and we'll ask you to enter it. And then we'll take care of the rest, checking eligibility and applying a deduction if you qualify.
Wow.
Sounds great. Sounds like we've got it covered. So there's obviously a ton of tax reform changes, like the new car deduction and the child tax credit that are coming out of this one big beautiful bill. And that's kind of causing this domino effect that are making changes in the software. New tax forms are being created for the very first time. And that brings me to my next question that we see getting asked. When does tax season officially start this year?
Ooh, that's the big question I think many people are looking for. Usually tax season starts around the third or fourth week of January. And that's when IRS opens up and starts receiving and processing tax returns. And, I know many taxpayers are worried about how the government shutdown impacts the start of filing season, in addition to the implementation of OB3 changes that the IRS needs to implement into their systems. What I can say about that is both the IRS and Treasury understand the importance of a timely start to the filing season and how it impacts taxpayers, and they're very focused on delivering a normal start. Uh, Employees tasked with the filing season readiness and OB3 implementations are actually not part of the furlough through any government shutdown. So we've seen shutdowns before. The IRS has plans of who's an essential employee, and those essential employees are responsible for making sure tax season starts on time and their mission critical work. So we've also seen members of Congress request information from the IRS on when the start of filing season will be for 2026. And so we should expect a date to be announced sometime before 2026. But at this point, I would say rely on a normal start to filing season until we hear differently.
Okay. Yeah, very interesting. A lot going on right now. And then, Tim, is it possible, like, if people want to file on TaxAct, like at the normal time, even if it's not open, or what does happen if someone goes to file at TaxAct?
That's a great question. And believe it or not, you don't have to wait for the IRS to open. You can go ahead and complete your return in early January, even if the IRS hasn't officially opened for filing yet. And so here's how it works. Once you're done, we'll hold your return securely. And the moment the IRS starts accepting, we transmit it right away. That way, you're first in line, no extra steps, no delays. It's all about giving you peace of mind and helping you get your refund as quickly as possible.
Okay. Yeah, makes sense that you would just hold it. And then as far I know in the product, it kind of shows you like the rolling like optimal amount, or if like things like that are still getting delivered and then do come out, what happens then to like your total refund? Or if you're getting something back, I guess. I just
Yeah,
am curious, like if that is still getting figured out, how would you know what you're getting back or what you owe?
that's right. So when you come back, if you've already filed and we're holding that, we'll communicate to you that changes need to be made. And you come back in, make those changes, and then we can submit to the IRS once they've opened. Otherwise, if you haven't and you've started, let's say early January before the IRS is open, when you come back in, any updates to the software or tax law that come out in season will apply to your return once you come back in. So you'll be taken care of regardless of the situation.
Okay, that's super, super helpful. And guess what, guys? Time for a rapid fire. This is my favorite part of like any podcast or interview that I ever listen to. So, but for us, these are going to be real questions that people are actually Googling right now. Obviously, Morgan and I obsess with Google. So Morgan and I are going to take turns asking while
Jared and Tim, you guys give us the fast facts, and then we'll jump in
Let's
with more
go.
details when needed. Sweet.
let's
Let's get into
go.
it.
All right, first one up. Do I need to file if I made under $12,000?
Okay, so that's a great question. The government gives everyone an automatic deduction each and every year, and it's known as the standard deduction. So for single individuals, that starts at 14,600. And so if you made less than the standard deduction, you might not have to file, right? That means that they deduct that amount of money and it puts you at a zero balance of tax due, right? but you probably want to take a look and check out to see if there are some credits or refundable credits that you can claim to get money back. And then, there are situations where if you had any tax withheld, so let's say you made less than 14,600, but the job that you worked withheld income, or maybe if you're a retired individual and there was some withholding done for part of the year, that money could be given back to you. So you'll want to go ahead and enter your information in to the software, and there could be some refundability and some credits that you are eligible for. So.
Yep, exactly. Our software will walk through that decision. And if you're under the filing threshold, but could still get money back, then we'll let you know.
Okay, interesting. So even if you're not required to file a tax return, you could still get money back.
That's right. Especially if you had any taxes withheld from a paycheck or qualify for certain credits like the child tax credit.
Got it. Question 2. What if I got a 1099K and just to sell stuff on eBay?
Yeah, the 1099K is an interesting one because sometimes you get it in the mail and you're like, what in the world is this? I've heard of W-2s, right? But what's this one? But yeah, you may get a Form 1099K for personal or business items that you sold through a payment app or an online marketplace. Like you said, eBay is one of those. A personal item is something that you own for personal use, such as a car, refrigerator, furniture, stereo, jewelry, you name it, anything that you had personally and you decide to sell it. Now, how you report these payments on your tax return, it really depends on whether you sold the item at a loss or a gain. And if you sold a mix of personal items at losses and gains, reporting those losses and gains separately is important when you do your tax return. Now, OB3, right, the tax bill that just passed, raised the reporting thresholds for marketplaces such as eBay. So fewer people will get those Form 1099Ks this year. However, that doesn't eliminate the need for you to report your income. That still remains the same whether you get a 1099K or not. The government does ask that you report any income that you have earned in the year in using these marketplaces. So that is important.
Right. And that's where our software helps out. If you're not sure whether the 1099K income is taxable, we'll ask you a few clarifying questions and make sure it's reported the right way on your return.
Interesting. So does the IRS know, like, if you have made money, like, do they still get the form even if maybe you didn't, the 1099K?
Yeah, so the IRS, if the 1099K is required, they will receive. So those payment processors like eBay or marketplaces, they actually are required to submit those forms. That's what the 1099K really is. It's a receipt that those marketplaces sent the IRS a copy of what you made this year. And therefore, they're sending you a copy of it to say, hey, we reported this income to the IRS. You should also report it. And that's how they can match up your income when you file a tax return. Otherwise, if you don't do reporting on it, the IRS could send you a letter or notice saying, we need a copy, or we didn't see you report this amount that was given to us by a marketplace. So it is important if you receive one of those to make sure that you determine the taxability of it, which our software can help you do.
Okay. Very interesting. Thank you.
Yeah.
This one, I use DoorDash a lot. I don't know if you guys do, but how do DoorDash taxes work?
Ooh, DoorDash taxes, that's a fun one. We think about gig economy workers is really what we kind of talk about here, and that's the technical term. You'll start Googling and looking like how to report my income. And a lot of it talks about gig economy. So really what will happen is in DoorDash, you're going to be what's called a W-2 employee in DoorDash, which means that you're going to get a W-2 from them, but you also are a self-employed individual as well. So, you might get a 1099 NEC for non-employee compensation. So depending upon the form you get, if it's a W-2, you're a W-2 employee. If you get a 1099 NEC, then you're self-employed, and that income gets reported on a Schedule C. The nice thing about that is it allows you to have more deductions. Whereas a W-2 employee, you don't get to have all these additional deductions on your tax return. If you get a 1099 NEC, that goes to a Schedule C in self-employment, but that also means you have an opportunity to deduct some items for expenses that you incurred as a self-employed individual.
Yeah, this situation can feel intimidating for those driving for DoorDash. It's a lot of information that Jared just went through, and You may be surprised that the IRS treats you as self-employed, as Jared mentioned. But you don't have to worry about that. We'll walk you through this step by step, from reporting your income to tracking expenses, mileage, and deductions. It's all built into our product, so nothing gets missed.
Yeah, it sounds like most gig workers, you just need to keep track of everything.
Yeah, I
I
mean, any type of documentation is important.
I do just want to like clarify. So you are a W-2 and you would get the 1099 NEC in the mail. It's like the 1099 NEC isn't what you would fill out.
No, the 1099 NEC is an income document that, like the W-2, it is the self-employed version of it. A W-2 is as an employee. If I work for the company as an employee, I will get a W-2 to report my income. If I'm not an employee but considered a contractor, right? That's the other part. It means that they're not paying for your insurance or benefits, and oftentimes they're not withholding taxes from your income, right? They're just giving you the straight income that you receive. They'll put that on a 1099 NEC. And so therefore you are responsible for reporting on a Schedule C, and there's a form called SE, right, which is self-employed income tax, and you will have to pay those taxes in your tax return. So W-2, it gets withheld by your employer. As a self-employed employee, you have to pay those at the time of filing.
Okay. And then that's where Tim, the product, like it takes the information that you have on the NEC and in the background is like putting that into the Form C and Form SE. Like we're not having to worry about that, but you know that that's where those go.
Yeah, that's exactly right. So if you have an NEC, we'll ask you to enter that information as it appears. And then in the back end, we're attaching what we refer to as Schedule C, and that's what the IRS needs in order to really report this income. And so we take care of all of that. And when it's time
Wow.
to submit your return, we send it over to the IRS.
Wow. That's amazing.
All right, we got a double whammy here. So to start off, one, what is the child tax credit? And two, how much is the child tax credit for 2025?
All right. So the child tax credit, if you have a child in the United States, the One Big Beautiful Bill expanded the credit that you're allowed to take. Now there's two parts to it, which is kind of interesting. Last year, the child tax credit was $2,000. This year, it is $2,200. So there's an extra $200 per child available to you. Now, not all of it's refundable. What I mean by that is a portion of the credit up to $1,700 per child is. So no matter what your tax situation is, $1,700 could be refunded to you. So if you had zero tax or balance due, right, you paid all your taxes, got to zero, 1,700 that could be refunded to you. The other portion, the difference between 2,200 and 1,700, will reduce the amount of tax that you owe, but is not refundable. So if I owed $2,200, right, it could reduce it all the way down to zero. But if I owed less than that, some of it could come back to me. So that's the beauty of the child tax credit, is that some of it's refundable. And like we talked about earlier, if you don't have a filing requirement, there is a significant amount of money that could come back to you in a refund because of the 1,700 that's refundable in the child tax credit.
Yeah, and the good news is you really don't have to worry about any of that. You just enter the information as you normally would. So early on in the process, we'll ask information about you, your spouse, your children. Go ahead and enter the information, as your social security number, as an example. Enter that, and then we'll apply the rest of all of the math in the back end to make sure that your refund is accurately reported.
Oh, that's great. Glad you have us covered. And then this, everyone wants to know, will I get a bigger refund this year?
Ooh, I like this one. The answer, and it's so specific, it's maybe, maybe not. I know that's what everyone loves to hear, right? No, you might owe less taxes this year, which is good, but that doesn't always mean your refund goes up. So setting expectations is really what I like to talk to people about, and withholding from your paycheck is a big one, right? It comes from an election that you made when you started working with your employer on your form W-4, and that just is telling the government, how many people are in your household, and how much withholding from each paycheck would you like to have done for you. And depending upon that withholding level that you elected on that form, it will directly impact how much your refund or balance due is each year. Some people need to withhold more, and some people say, I don't want to withhold much. I need my whole paycheck to be able to get by. And so therefore, you may end up getting less back at the end of the year. And so that's something to think about. Where I see a lot of differences from year to year for taxpayers that keep generally the same jobs, and not a lot of changes happen there, but they have um, life changes, right? So maybe they got married, or maybe they've had kids, or they've gotten second jobs, or they've decided to do side work or gig work. And so accounting for life changes is something that's important, and is probably the biggest impact change to someone's refund each and every year. So for me, I would say understanding the W-4 would be important.
Okay.
Yeah, and it's whether you're getting a larger refund or not, it really doesn't, as Jared said, tax laws are going to impact it, but also your life situation or changes that you may happen, whether you get married or have a child. All of those things play a role in whether you're going to owe taxes or get a larger refund this year. The good news is that we'll show you your refund all along the way. So as you enter information, we'll update that in real time. And then you'll also have the opportunity to compare this year's tax return to last year's. So you can see those differences and try to understand, okay, now I can see how this life change impacted my return from last year to this year, or how this law changed my return from last year to this year. You'll have the opportunity to see all of that within our product.
Wow, that's awesome. And so it kind of sounds like potentially getting a smaller refund could actually be a good thing.
Exactly. I mean, it means you kept more money in your pocket during the year, and therefore you're not getting as large of a refund.
Can't complain with more money in your pocket.
Absolutely not.
All right. And now for one of the biggest questions coming out of the one big beautiful bill. Did no tax on tips pass? And will you owe taxes on tips?
Well, that's a good one as well. You guys are lining them up here. So the answer is yes. No tax on tips pass, but under OB3 and starting this year, some reported tips will be treated differently based on really two factors. And this is what we have to understand is, one, what's the qualified industry? And two, what constitutes a qualified tip, right? And so Treasury has provided some occupation codes. So what they're saying is, if you worked in these 8 different sectors, like beverage and food services, entertainment, events, hospitality, home services, personal appearances and wellness, recreation and instruction, transport and delivery. Those are the main industries at which you can first consider whether my tips are going to be taxable or not. And then the second qualifier for that is, in order to claim the deduction, the worker must, again, both be in the occupation listed to receive the qualified tips, and then they're going to have to qualify under the definition of how those tips are received. What do I mean? What do I mean by that? That's more complicated mess, right? So it's not just, oh, I got tipped, everything's free now, right? What it means is that, were your tips paid by cash or card or an equivalent medium, check, debit card? Was it a tangible token for a tip? So understanding the currency, right? So was it paid with a type of U.S. currency or a currency, right, that you can track? So the answer is yes, it was. Okay, that's great. The other part of it is, was it received from a customer through like mandatory or voluntary tip sharing? Sometimes these are like tip pools that you'll have for waiters and waitresses, and that does qualify in those tip pools, right, as a qualified tip. The other part of it is, was it a voluntary tip? And what I mean by that is, sometimes we think about large parties going to a restaurant. I know I go sometimes with large parties, and you have that automatic 18% gratuity. That gratuity is not considered tax-free because it's not negotiable by the taxpayer. So if I'm there, I didn't have an opportunity to to say I wanted 15%, 12%, it was automatically applied. So if it's automatically applied with no negotiation from the end user, then it's not a tax-free deductible amount. Okay, so that's kind of interesting in that side. Now there are bills in Congress right now that are trying to be introduced that would change that or to modify that. But as of it's written today, that's how it works. And then there is some other interesting stuff when we think about what doesn't qualify as a tip. The Treasury actually explicitly added a few categories that I think are funny that don't qualify. One is, if you received any tips for illegal activities, prostitution services, or pornographic activity, those don't qualify. So sorry, guys, that's not a tip that qualifies to be deducted. But there are some limits that are in there, and we can talk a little bit about that as well later. But know that you do have to qualify in those two main categories. Is it an industry, and was it a voluntary tip paid in cash, credit card, check, things like that?
That's a lot of information just on tips. And so these new rules definitely make it more complicated. As Jared mentioned, it depends on your job and whether these tips count as qualified. While you should be tracking your tips, you don't need to sort all of this out on your own. So you'll enter your information as it is on your W-2, and then we'll ask follow-up questions to clarify what's qualified and not when it comes time to reporting this information.
Wow. Glad that you're making it easy on us. That's a lot to remember. And we are going to be posting a blog about this video as well. So we'll have that list that Jared mentioned listed out of the different categories. And my next question is very similar to this one about the tips, but this is, did the no tax on overtime pass? And when will the no tax on overtime start?
Great question again. Yeah, so no tax on overtime did pass, but it's a little bit different than you might expect or it sounds. So OB3 exempts the incremental part of your overtime from the federal tax. The act includes a federal income tax deduction for qualified overtime, effective for tax year starting 2025. So that's January 1st of this year, and that goes all the way through 2028. And the deduction will be claimed on an individual's federal tax return, and it's retroactive, right? So that's the retroactive part, January 1st. But the catch in all of this is it's only the half in time and a half that is tax-free. So let's think about this as an example. So if individuals pay $10 per hour for non-overtime earnings and $15 an hour for overtime, right, your time and a half, only the $5 per hour premium pay for overtime is eligible for the new tax deduction. So again, that's going to be it's a deduction that happens after the fact that you'll claim on your tax return. Also, overtime is eligible, and there's a limit to that. So you can only claim up to $12,500 or $25,000 if you're married filing jointly for the overtime deduction. Now, there is a cap on income. So if your household as a single individual makes $150,000 through your modified HEI and it exceeds that, what they'll start doing is they'll start reducing the amount of that $12,500 down that you're eligible to claim. Likewise, if you're married, that starts at about $300,000. They call it a phase out, where they start limiting how much of that overtime you can deduct as tax-free. So again, it's not quite as clear cut as you would think when you say overtime is not taxable. It's simply only the half, and there are limits to how much you can actually deduct on your tax return.
Wow.
Yeah, and I think this is a good reason why we rely so heavily on our internal tax professionals to handle this math for us, right? So they take this complicated law, handle the math in the back end, so that you, when you're entering your overtime information, just ask the questions, just answer the questions that we ask, and we'll apply the math on the back end so it's reflected in your return.
It sounds like there's a lot of qualifiers for the no tax on tips, for the no tax on overtime, and if it's truly tax-free or not. But just to level set, we're talking about from a federal perspective, correct? Like the states and local taxes could still be handled differently?
Yeah, absolutely a great question. So this is only the federal, and like Tim mentioned, for tips, it's going to come through your W-2. And there's going to be reporting on that. So, that helps some of it. But the states each will have their own ability to determine whether they want to conform to the federal government allowing for no tax on tips and overtime. And many states do, but each state will independently choose how they want to tax their state revenues. So again, this is a federal law, and then each state gets to decide if they want to do the same thing as the federal government or go a separate way. So it will depend upon each state.
Interesting. Okay, last question here. And this one actually doesn't come directly from Google, but it is one that we had to ask. So there's plenty of tax talk around OB3, but not all of it really adds up. So from your guys' perspective, what would you guys say is the biggest misconception about the One Big Beautiful Bill?
I think the biggest misconception that I'm hearing and seeing is that there's some check coming in the mail similar to like a stimulus check that we heard many years ago, or we all had many years ago, called the economic impact payments. It has been floated around through Congress of people wanting to do that and pass bills to issue those types of checks. But unfortunately, none of that was included in OB3. And so there is no just check coming for some sort of stimulus payment. So I think that's some of the biggest confusion that I've heard outside of the actual tax items that have passed, that there's just going to be a check written. And at this time, through the current bill, there is no stimulus check payments.
Yeah, it's really about reducing taxes throughout the year, which doesn't always mean you'll get a larger refund.
Interesting.
All right. And that's it from us. Thank you so much, Jared and Tim, for participating and walking us through all of the changes that are in the One Big Beautiful Bill. We know it's a really busy time for you guys as we approach the October 15th deadline for extension filers. So yeah, just really want to thank you for your time.
Yeah, and anybody listening, if this helped clear things up at all, we would love a like. And if you have questions, please feel free to put it in the comments and maybe it will be what we cover next time. Thanks, everyone.
All right.
Thank you.
Thanks for having us.